Investing in Bitcoin has hit the mainstream over the past year, with news of buying from high-profile investors such as hedge fund billionaire Paul Tudor Jones and Tesla's Elon Musk. Over recent months, many investors have changed from being afraid of investing in Bitcoin to being afraid of missing out on an entirely new asset class that is rapidly gaining mainstream adoption. But the challenge of Bitcoin investing has kept many on the sidelines due to the complexity of buying digital currencies directly and the lack of support for Bitcoin investing through traditional bank and brokerage accounts. In recent weeks, regulators in Canada have recognized that investors need new solutions to making Bitcoin investing possible and have approved the launch of Bitcoin ETFs. This makes Canada a world leader in modernizing its regulatory framework to facilitate Bitcoin investing in an ETF structure. Just as Canada led the way with the creation of the world's first exchange-traded fund back in 1990, we lead again with the launch of cryptocurrency ETFs. And this is why we at Evolve created the Bitcoin ETF with the ticker EBIT. At Evolve, we are committed to building funds that help investors participate in the most meaningful trends that are changing the world. We believe digital currencies will gain adoption over the years ahead and facilitate modernization of the global financial system to the benefit of all people around the world. So what is Bitcoin? Well, Bitcoin is a digital currency that trades over the internet on what is known as the Bitcoin blockchain. The blockchain is software that uses cryptography to guarantee Bitcoin ownership and allow it to be sent from one person to another at any time. The supply of Bitcoin is limited to 21 million coins, most of which are already in existence. This limited supply has attracted investors who are worried that regular money could be losing value because governments are making too much of it. Ever since the global financial crisis of 2008, central bankers have been printing more and more currency. Some investors worry that this will lead to inflation and be harmful to their savings, and it was this fear that led to the invention of Bitcoin as a digital currency with limited supply that could be used by anyone. Now, just as a dollar can be divided into 100 cents, each Bitcoin can be divided into 1 million smaller pieces. So there's more than enough for everyone to participate, but the total supply remains fixed. This combination of easy accessibility and limited supply has drawn investor interest to Bitcoin as an alternative to gold, giving it the nickname of digital gold. So how does the Bitcoin ETF work? Well, most investors use brokerage accounts to buy stocks or bonds or mutual funds, and an exchange-traded fund or ETF is simply a mutual fund that you can buy on the stock exchange, just like the shares of a company. So when you buy units of the Bitcoin ETF, you are investing in a fund that directly holds physical Bitcoin on the Bitcoin blockchain. The Bitcoin that's owned by the fund is valued using the CFCME Bitcoin reference rate, which is a highly regulated Bitcoin price index that has been used to settle over $300 billion worth of futures transactions to date. All the service providers involved in the Bitcoin ETF are regulated and audited, just like your bank or brokerage firm. Investors can be confident that best practices are being followed on every step of the way. So in this way, buying the Bitcoin ETF allows an investor to own Bitcoin directly in their brokerage account. The fund holds actual Bitcoin, so you can be assured that your money is invested directly into the Bitcoin blockchain. When you invest in the Bitcoin ETF, you are participating in the evolution of digital finance from the familiarity of your brokerage account. To find out more, please go to our website at www.evolveetfs.com and speak to your financial advisor.